All right. Good morning, folks. Tim Davis here, coming to you guys with another market review. Yes, um, I know today is Tuesday, May the 31st, 2022. It's the last trading day in the month, you folks. So they could be very interesting. Today could be very interesting uh, because most indices are making an attempt to post a green month. But let's see how the day pans out. Me myself, I do believe that we can possibly start to see another pullback in markets since we had several rally days or almost a rally week pretty much. Last week was a pretty strong week for major indexes, but I think um, as we are approaching the end of a month, heading into a new month, that rally could be about to fizzle out. Now, let me show you guys what I see as far as some indication that the rally may be about to fizzle out. We'll start with the VIX. Again, we're approaching the end of the month. We're still in the bear market. So none of this changed. We just had a big old rally within the bear market. None of that's changed. So while none of that's changed, what are the technicals showing us? Well, looking at this VIX, this is a daily chart of the VIX, folks. This is something I pointed out in one of my videos, I want to say this past weekend. See, the VIX is pretty much has been in a range, a bigger range. And if I expand this out, you can see this bigger range that the VIX has been in. Let me expand this out real quick before this is a daily chart of the VIX. So in general, since I'll say November of last year, between these two bands that I got marked here, this upper band, which is the around a $40 level, upper trend line around a $40 level, and then lower trend line around the $16 level. We pretty much have not visited that $16 level in a while. We've been hovering on the low side at around 20 bucks, since January. And since about, say, April, since about the middle of April, we have not visited that $20 level either. We've been hovering just above 25. So looks like we're getting tight. The VIX is getting tighter and tighter, pushing towards the upper portion of this range and threatening a breakout above this $40 level. So whereas VIX settled for the past month or so, well, I kind of highlighted that too, so you can see that. For the past month or so, I highlighted I would call this a distribution or accumulation phase. This is where the VIX, this little highlighted area you see me had this cleared. Since April, after the VIX had this big break above this level, the VIX has been using this level here, which is just around a 25 or just about a 25 level, as a level of support, and it's been holding strong, as indicated right here. It's indicated here, and it's indicated here where we are now. We have hit that area and got strong bounces. So normally when I point these areas out, normally it's a strong level of support and resistance, meaning that it was previous level of resistance, which you can see here, left side of my screen, which you can see here, which you can see here. And then all of a sudden, right around the end of April, big green candle, we broke out above that level of resistance. So now, 9 times out of 10, previous resistance becomes support. So look to the right side of my screen, you'll see after the VIX broke out around at April 25th, we broke out above this level, could not break this new ceiling, could not break that $39 or $40 level. Instead, we pulled back. But where to? Right back to what used to be resistance, now support, and look what happened. Hit that shaded area, and we bounced. It was around beginning of May. Hit that shaded area and bounce. Back up towards the top of the range, around 36 or 30, 35, 36. Got close to the top of the range and pull right back. Where to? Back to support. Back to that shaded area again. Got to bounce. And where are we now? back to the shaded area again. Now, will this bounce be sustainable? We shall see. I'm in the camp to believe it will. Let's see. So now the VIX is hit that shaded area again. It's like it's heading for a possible bounce. And if I was to look at the other end, the major indices, you will almost see that they're almost agreeing. So it is now 6:48 a.m. on Tuesday morning, 5/31/2022. So we'll take a look at the VIX, S&P E-minis futures and see what it's showing us right now. What I want to point out immediately that I've been tracking the major indexes by using a Fib retracement tool. The Fibonacci retracement tool gives you a pretty much can give you a general idea after stocks hit a certain level, some levels that price action could be traced back to. So this is Fib level that I drew from the highs to the lows. Let's see if I can tell you guys exactly. So from the COVID low up to the high that we had around the January of this year on the E-minis futures, S&P E-minis futures. And normally when we started a pullback from that 4,800, what the market is attempting to do is retrace some of the move that it's seen from the COVID low. It is an attempt to retrace some of that move that we've seen since we had that big move up from the COVID low and up to the current recent high back in January. So now we're starting to retrace that move, which works well with Fibonacci. Once you see we hit a certain pivot point and we start to back off that high and start to retrace some of this move that you see here from April of 2020 all the way up to January of this year. So we're starting to retrace that move. The Fib tool can help you see where we could see some possible short-term rallies and some bounces before we hit a ceiling and reverse again. So now with that said, to me, it looks like Fib got down to the 38.2% retracement and got a little bounce on the S&P minis. And looks like this bounce could be fizzing out now. And one of the bigger reasons that I see why, that helps you almost believe why, is that this Fib area looks like it has been a strong area of support resistance. Look to the left of my screen. Let me show you what I mean by it's been a strong area of support resistance. And again, like I always say, previous resistance becomes support and vice versa. So on the left side of my screen back in May, we were hovering around that Fib level as the level of resistance. Finally broke through it. Finally broke through it here, and then we just continued to go higher. Broke through it here, just a bit, continue to go higher. Got halfway between the two Fibonacci lines, and look what happened. Right back to that level, it became support. Look at that, folks. Nice bounce off of that level. Previous resistance becomes support. Nice bounce off of that level. So that became a strong level of support. And then look at this, a couple tests. Came up to that 4,800 level, which became a reversal point, pivot point. Then we started to trade downward, and look what happened. Right back to that Fib level, got a bounce, quick snapback bounce, and look what happened around here. Tagged that level multiple weeks, and market did everything it could to stay above this level. So we got strong bounces here, and then all of a sudden, we see this reversal point here. And then back down to this level, and look what happened. Could not hold this time. Could not hold. So now what happens? Then more than likely, and I always say more than likely because nothing's never carved in stone. Anything can change at the drop of a dime. More than likely, this Fib level now, 23.6, becomes a level of resistance again because we broke through it. And look what happened. We hit the 38.2, got a bounce here, back up to this 23.6, and look where we're starting to see now. some stall. Starting to see some stall. So that coincides with the VIX move. So what I'm inclined to believe is that we'll possibly start to see a reversal sometime this week and maybe even break right through this 38.2 and continue to move lower. Because again, let me back up to this VIX move. This VIX move looks like it wants to rally. VIX looks like it wants to rally, and this is a weekly chart of the VIX. So you'll see again this accumulation, this support area that I had marked out. It's like it's holding nice in. Look what's happening now. We just started this week and got a little green candle on the form. And look at the Williams percentage. It's starting to the oscillator, like it's ready to start to possibly turn back up. The full stochastic, it's like it's ready to possibly turn back up. The oscillators, Williams percentage looks the same. RSI looks the same. It's starting to hinge up. Oscillator starting to hinge up. And we got a big bounce off of the support level on the VIX, like it's starting to travel back upward. Now, so I think the VIX is ready to rally, folks. The big question is if we do not break below this level of support and we continue to rally, how high do we go? That is the big question that we'll have to see over the next week or so, if the VIX can break above, finally break above this level. We have to see. But it's like we're possibly going to be heading into June with possibly some more volatility in the markets and possibly some lower prices in stocks. We're going to see how that pans out. All right. So that is our VIX. Let's look at our S&P. And in general, even if I was to show you guys the NASDAQ futures, you're going to see the same thing. You're going to see it running into some a level of resistance somewhere. And I'm switch to a daily chart where I have my indicator. I have my moving averages as well as fib tracement. And I'm just going to highlight what the moving averages are showing. So here is this yellow line is my 20-day moving average, and this dark, light blue line is a 50-day moving average. And as you can see, as price action started to bounce last week, the moving averages are still just in step and still trending lower. And it looks like we're about to run into some resistance right around that moving average on the NASDAQ. So even if it goes a little bit high, it has to contend with that 50-day moving average, which is going to more than likely be a strong area of resistance. That's on the daily chart. And if we look at the Dow Jones, same scenario. And it's already starting to show some weakness on the Dow on its daily chart, right at the 50-day moving average. Look at it. It becomes a level of resistance. See how last week had a big rally on last week, hit that 50-day moving average on the Dow Jones futures, and look what's happening now. It's starting to form a red candle, run into that 50-day, and it's starting to get rejected. And look at the Williams percentage up into the overbought area on the daily chart, and it's starting to hinge lower. Look at that full stochastics also starting to hinge lower. RSI also starting to hinge lower. So it looks like this 50-day and the 200-day that's right above it is going to be a strong area of resistance for the markets, especially for the futures market for Dow Jones. So it looks like the market's running into some problems already before cash market opens, or the regular market's open. All right. So that's a look at the Dow Jones, S&P futures. Glance at the NASDAQ futures. The NASDAQ futures, it still has a little bit of space between where price action is now and the 50-day moving average, but I don't think we're going to make it that far. And what about the Russell 2000? Same scenario. Look at that. Right back up to that 50-day, and look what's happening. It's running, using that 50-day as a strong area of resistance, and it's having a problem breaking through it. And you can see the hinge and the Williams percentage starting to hinge lower. Williams full stochastic starting to hinge lower as well as we approach that 50-day moving average. It looks like it's starting to turn into a strong area of resistance. So again, look at that VIX, folks. You know, could markets punch right through these 50-day moving average? Possible. but the VIX is telling me otherwise. The VIX is telling me otherwise. The VIX is showing me that this, let me go back to a cleaner version. And I'm even going to put this on a 4-hour chart. Put this on a 4-hour chart to show you the same type of scenario. And as you can see, every time we have, over the past, month and a half, this shaded area that I highlighted on the left side of your screen, you can see it was a strong level of resistance. Then we broke through it. So again, that was around April 22nd. And then as we broke through it, could not break through that $39 level, kept on pulling back, but only the furthest we pulled back to was right there in that shaded area where we broke out above before. So now that becomes a strong level of support. You can see it even clearly here on the 4-hour chart. So with the VIX showing that it's bouncing from, it's been bouncing from this shaded area, over the past month, every time we pull back to it, more than likely, we're probably going to see another rally in the VIX. So I believe that the VIX is just inverse related to the S&P. Also, the other indices also more than likely to follow the S&P. So as you've seen, as I showed you already, as we approach the 50-day moving average on a daily chart of some of the features of the NASDAQ, Dow Jones, and E-minis, more than likely, it's probably going to fail at those moving averages because like the VIX wants to really bounce here. So that's something to look forward to as we start another trading day and another trading week and another trading month as we end the month of May today. All right, one last thing I want to point out is you guys who have been paying attention to my videos over this past weekend, I told you that the guys, oil prices are ready to challenge, I think, previous recent highs we pulled back from. And I'm going to highlight this also by using a fib tool. Look at the high we hit back in March of this year at 129 level. And we pulled back right to that 61.8% retracement level. And we traveled between the 61.8 and the 78.6 quite a bit. And we are starting to make a move to break out above that level. Now, in the near term, we're overbought shortly in the near term. So today, I would not be surprised to see crude oil pull back quite a bit. I would not be surprised to see it pull back, but not, nothing drastic. Maybe just a little, maybe back down to 115 or even to this level right here, which is around 116, 115. Would I be surprised to see a pullback there, which is going to be an area of support. And if we went low, I would not be surprised to see us pull back to around 113. But between 113 and 115, I think that's going to be an area of support for crude. I think ultimately, crude is ready to make a huge run higher as we see this nice trend up that we've been in over the past week. Temporarily, looking at the RSI on a 4-hour chart, we are in some overbought territory. So I would not be surprised to see a little pullback here sometime today or tomorrow. Then let's glance at a daily chart because that is where price action is really showing you what crude wants to do. It is trying its best to break out above this 118 area in a big way. So a little back and forth over the next day or so, possibly, but I think eventually we'll break out above that 120 and head towards that 129. And then ultimately, let's look at the granddaddy of them all. Let's look at the monthly chart and show you what history is showing us. One thing history is showing us, I don't think gas prices are going to be letting up anytime soon. So we're probably going to be seeing some high gas prices this summer. I mean, extremely high prices we probably haven't seen ever. As long as crude oil continues on its path, we're probably going to see some very expensive gas prices this summer. Now, here's a monthly chart. Look at that. Look at that strong uptrend that we've been in since we bounced from that low back in April of 2020. Look at this strong move up in crude. So in general, a couple little minor pullbacks here and there, but in general, since 2020, crude has been on a strong uptrend. One big down month was back in November of 2021. As you can see, this big red candle here in the center. Other than that, prices have been really pushing strong. You know, nothing goes up in a straight line. So you have these, like here's a long wick right here for March, where price action got, that was at 129 level and pulled right back. But in general, it's maintaining these higher lows on the way up on this monthly chart. And ultimately, folks, we are, and on monthly chart, even over what territory now, but ultimately, I think we probably see a blow off top in crude, and we could possibly challenge that 147 level. See on the left, that area of resistance. We hit that level before and we pulled right back. That was in 2008. It's like we probably want to challenge that level possibly this year. And that's going to probably be a strong level of resistance. So we hit that level before and pulled back. It was active resistance. That's probably going to be a strong level of resistance, folks. So said it to say that if we find a way to continue to break higher over the next couple of weeks and we march up towards 130 and surpass that, and by the end of the year, if we make it up to that 147, I do expect some type of challenge for crude to just punch through that level in the first try. I think it's going to hit that level and possibly have a big reversal. So, all right. So that is a quick overview of what to look out for this week and what to prepare yourself for. So adjust your positions and adjust your portfolio accordingly. I think crude eventually is going to go higher. We're going to see much higher crude prices, I believe, and I do think the markets are going to start to reverse again. So adjust your portfolio wisely. I gave you guys some ideas as far as crude on this past weekend. So hopefully you guys got a chance to review that video and possibly take advantage of some of this move. And also prepare yourself, folks. I also do have put positions in my portfolio that I had just holding on to, waiting for, any type of rejection or reversal at some of these rallies that we've seen over the past week. So always set your portfolio carefully and be ready for whatever may come your way. All right, folks, until next video, I will catch you guys later.